Good afternoon and good evening. Hello, everyone, and welcome. It really is an honor to be among such a distinguished company in the service of such an important issue. My name is Don Forgeron. I'm president of the Global Federation of Insurance Associations. JFIA is a worldwide voice for our industry. The companies we represent account for almost 90% of insurance premiums around the globe. As COP26 continues in Glasgow and negotiators do their important work, I can't help but think about the summer we just had in Canada, which is where I'm speaking to you from. A country not exactly known for its heat waves, but let me tell you about our summer. In the span of only a few days, we lost more than 500 people to record high temperatures in our western province of British Columbia. Reports out just last week actually have put that figure closer to 600 people. No one was prepared for a crisis of this magnitude. In June, the town of Lytton set a Canadian heat record, 49.6 degrees Celsius, approximately 120 degrees Fahrenheit. The next day, a wildfire sparked in a nearby valley, and within hours, the entire town had burnt to the ground. A disaster and, of course, a potential omen. Climate change is no longer a future threat. It's a clear and present danger to property, to infrastructure, to the natural world, and of course to human lives. Today, JFIA is on the front lines as physical climate risks escalate worldwide in the form of heat events, wildfires, floods, and tropical storms. But beyond this role, we believe the insurance industry has a larger and more pivotal role to play as we move together toward a sustainable economy. And that's what we've come together today to discuss. I want to thank the people you'll be seeing on your screens, our speakers, and our high-level panel for sharing their experience and wisdom. And I want to thank everyone who's watching for their interest in this urgent global issue. So with that, let's get started. And I'd like to welcome the Director General of the Association of British Insurers, Hugh Evans. Hugh?
Thank you very much, Don. I'm delighted to offer a brief word of welcome to this event today, because the UK is enormously proud to be hosting COP26 in one of our finest cities, Glasgow. As the First Minister of Scotland said earlier in the week, it would be both poignant and special if one of the cities that was at the forefront of the Industrial Revolution became associated with decisive action taken to decarbonise our world and move to a more sustainable future. And we know to achieve that aim, insurance and long-term savings has a special role to play. Here in the UK, we have the fourth largest insurance sector in the world and the largest in Europe. So we have a special responsibility. And that's why earlier this year, the ABI and its members published a climate change roadmap that sets out an ambitious path for our sector, covering investment, supply chain, products, and net zero targets. It's the first such national blueprint for any insurance sector in the world. And we were delighted it was endorsed by Mark Carney, by the UK, and by the Scottish Government. But of course, no single national effort can be enough to achieve the progress that we need to see. And that's why coordination and joint working across our sector remains so important. It's why the ABI has remained a leading member of Insurance Europe despite Brexit, and why we are proud to work closely with the Global Federation of Insurance Associations who are running this event today. Because whether it's work on regulation, on transition, on capital, or simply sharing best practice and innovation, we have to work together, as today's excellent contributors will no doubt articulate. But before we start that debate, it's my particular privilege to hand over to the leader of Glasgow City Council, Councillor Susan Aitken, who will provide a formal welcome from the host city. Councillor Aitken.
Thank you very much, Hugh. Good morning, good afternoon, good evening, wherever you are, and the warmest of virtual welcomes to Glasgow, to COP26, and to today's event with the GFIA, which I'm very pleased to be able to take part in. As we reach the latter stages of the first week of COP26, delegates are obviously deep into the business at hand, and there are few more urgent aspects of business across these 12 days than the discussions about the specific needs of transition for our cities, our communities and our economies, and how we finance that. And today's discussion that you will be having takes place, of course, in the context of yesterday's finance theme day and some of the, I think, very significant announcements made by people like Mark Carney yesterday, which I think move us a step forward significantly. So just a mile from where I'm speaking today, the international negotiators are obviously continuing to press ahead for the collective goal of delivering on the commitments of the 2015 Paris Climate Agreement to tackle the global climate crisis and create a safer and more equitable future for all of us. And as leader of the host city, I want to use the platform that I have to add to those voices who really want to see that ambition translated into action where we know it can have the biggest bang for its buck, and that's in the world's cities. Over the past few days, Glasgow, this quintessential city in transition, has been telling our compelling story, which Hugh just alluded to there. Our rise to become a titan of the industrial age, and then the social and physical devastation that followed deindustrialisation, and our re-emergence as we now continue to overcome the challenges of our past. And much of our renaissance is also down to Glasgow's willingness to find solutions in collaboration with civil society, with academia and with business. As we enter this next critical decade, those partnerships are going to become ever more important in shaping our response to the climate emergency. And that response needs the innovators to be in the same room, not just those whose expertise lies in the technical and scientific, crucial though those are, but also those with a willingness to be innovative in our relationships and our partnerships. The decade ahead will, I believe, demand new and very different relationships with the financial sector, with pension funds, with institutional investors, and of course the insurance sector. And a new partnership between the public sector and the insurance sector is in our collective interest. City leaderships are crucial drivers of policy and change, and together with the insurance sector, we're increasingly aware about the growing risks that are posed by climate change and the need for adaptation and mitigation. You bring real expertise in this area, which we can draw on and learn from. As cities attempt to decarbonise and build resilience, partnerships between local government and the insurance industry can play a substantial role in keeping premiums affordable, but also expanding coverage to those groups and individuals who are most vulnerable to the impacts of climate change and who are also most likely to be uninsured. As the public authorities with a responsibility for enforcing building controls too, the years ahead are likely to involve an increasing role for local authorities in ensuring that no construction takes place in areas at risk from climate change effects, particularly increased flooding. Similarly, cities are likely to assume additional responsibilities around the enforcement of climate compliant building codes. In partnership, we can help to create the wider enabling conditions on a whole range of matters from energy efficiency to flood resilience. And there's a need too for collaborations with institutions with access to long-term patient capital that can be mobilised over the next decade. Local public sector leaders realise that the unparalleled scale, pace and complexity of our transition to net zero carbon means that it's not going to be delivered by governments alone. Finding creative financial solutions means setting the direction and mobilising the private sector to enable that. Without addressing and resolving the issue of financing transition, we simply can't deliver on 1.5 degrees. And increasingly, I know that cities and municipalities are viewed as safe long-term investments, something that we in Glasgow have illustrated with an agreement reached with institutional investors back in 2018 to address a long-standing equal pay dispute that was inherited by my administration. And here in Glasgow, we also have a plan for our low carbon transition, our green print for investment, a prospectus spanning £30 billion worth of interventions, which are also investments and development opportunities, on which we're inviting investors across the globe to open discussions with us on. The green print underscores the connectivity between our overlapping priorities of reducing emissions, adapting to and mitigating climate change, modernising the systems on which cities like ours depend, and addressing social challenges from fuel poverty to poor transport, all while stimulating city economy and economic recovery. There's the basis there for a relationship that can go beyond just a traditional return on investments. It can enhance Glasgow's adaptive capacity, strengthen our city's resilience, fight climate change, deliver transition as quickly and smoothly as possible, and also deliver on key issues that are central to the demands of industry and to business that are located in our city, including the insurance sector. Issues like attracting, growing, retaining skills for the future that will help your industry to grow and to flourish. I want to conclude with just a final point, and that's about how actually over a number of years now, the insurance and long-term savings sector has already really played a part in Glasgow's recent record of translating ambition into economic and social transformation. Within just 2 decades, Glasgow has become an international leader in precision medicine, in life sciences, in space technology, in renewables, and in financial services. And the insurance industry in particular has played its role, a leading role in that latter sector. More than 10,000 people work in the insurance and long-term savings sector in the Glasgow city region, and our city centre is home to one of the highest concentrations of these jobs in the whole of the United Kingdom. International firms with offices in Glasgow, AXA, Allianz, Chubb, Zurich, AIG, to name a few, are part of Glasgow's business community, an integral part of that community, helping to produce over £1 billion of economic output annually and helping to attract and retain that talent that we need for a buoyant city economy. We have aligned ambitions and aligned outcomes that we both need, both public and private sector, and the insurance industry in particular, that I believe that we can work together on. And Glasgow is certainly ready to play our part in building those relationships and those long-term collaborations that can deliver for the city and deliver for your industry alike. And I very much look forward to others joining us in that. Thanks very much for listening this morning. I hope that the rest of your event is extremely productive and successful. And I hope that some of you at least will be able to come to Glasgow, if you're not here already, in person over the remainder of COP26. Thank you.
Thank you, Councillor Aiken, for those remarks. And there's no question that municipal governments, city governments, are the front lines in many ways of this issue. And Glasgow is not unique in that regard. And I just wanted to echo a few comments that you referenced with respect to land use planning, flood management, and so on. There's so much that the industry can and has in different jurisdictions partnered with municipalities to help in this regard to make their cities and towns more resilient. So best of luck to you in that regard, given the pitch you just gave us, I suspect your phone will be ringing as soon as you stand down from this event. And I also want to acknowledge the work that Hugh and the ABI have been doing in providing real leadership on this file, both at the JAFIA level and elsewhere. So thank you, Hugh, for your remarks as well. The UN Environment Program Finance Initiative, or the UNEP-FI, is a global partnership in which the United Nations works with banks, insurers, and investors to advance sustainable finance and encourage responsible investment. For our keynote address, we'll shortly hear from the head of this initiative, Eric Usher. Eric oversees the governance, strategy, and day-to-day management of UNEP-FI's work program and global network development. Prior to his time at UNEP, Eric Usher spent about 20 years in low-carbon sectors, including some time in Canada, working on technology commercialization. Eric, the podium is yours.
Thanks very much, Don, and pleasure to be with you, and appreciation to JAFIA and all the partners that have gotten the financial community, the insurance community to Glasgow. I think physically and spiritually, I think mostly in terms of actions and signals. And I think so far we're only a couple days in, but there's a lot of positive signals that are coming out, even if we all know it's not quite enough, or it's definitely not enough yet. So yes, thanks, Don, for the introduction. I'm going to give some remarks about the role of the insurance and reinsurance industry to this global challenge of climate change, and also specifically remarks around the Net Zero Insurance Alliance and the very important progress it is making. So I think, as you all know, risk manager, the insurance industry, you play your three-part role as risk managers, insurers, and investors, and which really uniquely positions the industry to help support the building of a climate resilient communities, and the type that Susan has just been talking about now, the relationships of the different actors that need to be at the table and essentially together accelerating the transition to a net zero emissions and fully resilient economy in line with the objectives of the Paris Agreement. As risk managers, insurers really help communities understand, prevent, and reduce climate risk. And you've already made several mentions, examples of how that is happening. I think is your role as insurers, protecting households, businesses, public entities, and governments by absorbing, the wide range of climate-related shocks. We used to talk about shocks coming in the future, and as Don, you've mentioned, they're actually with us today. You also certainly play a very important role in engaging with your clients on their decarbonization pathways and supporting the low and no emission insurance solutions. And of course, as institutional investors, insurers can engage also from the investor side with the companies and be active stewards of capital, which needs to head in the direction that, in theory, it's easy to talk about, but of course, there's a lot of challenges, including the transitional nature of this move. In the context of climate change, we talk often about breaking between mitigation, so reducing greenhouse gas emissions, and adaptation, which is coping with the physical impacts of climate change and building resilience. Essentially, it's two sides of the same coin, but let me give some remarks on them individually. Regarding mitigation, the Net Zero Insurance Alliance has been established by a group of leading insurance and reinsurance companies, which are under the UN Principles for Sustainable Insurance, which we host. It was launched at the Venice G20 Climate Summit in July of this year by its founding members, which include AXA, which is the chair of the initiative, Allianz, Aviva, Generali, Munich Re, SCOR, Swiss Re, and Zurich Insurance Group. These companies together have committed to transition their insurance and reinsurance underwriting portfolios to net zero greenhouse gas emissions by 2050, consistent with a 1.5 degree maximum temperature rise trajectory. By establishing the NZIA, these insurers and reinsurers are building on their climate leadership, all of whom they are members of the UN-convened Net Zero Asset Owner Alliance, which was the first net zero focused finance alliance. It was launched 2 years ago in 2019. It was the one that the UN Secretary General Antonio Guterres, at the opening of COP26, which feels like a long time ago, but just a couple of days ago, he referred to it as the gold standard of net zero commitments. They've had 2 years. Last week, they issued their 2-year progress report, and you can really start to dig into the details. What does it mean to start focusing on full-scale holistic decarbonization, really aiming for zero? And I would say the net is a supporting feature. The focus is on getting to zero. Now, I think on the insurance underwriting side, I think we have to acknowledge often that in terms of climate, it's probably been somewhat behind, even though insurers really have been leaders on the investment side. Insurance underwriting, I think there's a lot more, or some catch up, if we can say, to do. And the NZIA really is focused on trying to do that. And let me talk a little bit about the 5 work streams which it has established to arrive at that. The first is on metrics and targets. And here was announced a couple of weeks ago that it has launched a collaboration with the PCAF, the Partnership for Carbon Accounting Financials, to develop the first global standard to measure and disclose insured greenhouse gas emissions. So this working group, which includes the PCAF insurance signatories, the founding NZIA members, and a number of other reinsurers and insurers. So this is going to develop a global standardized methodology to measure and disclose the GHG emissions of insurance and reinsurance underwriting portfolios, to give, I think, insurers deeper insight into the risk profile of their respective underwriting portfolios, and also, of course, to stimulate innovative approaches to decarbonization and create the conditions for comparability across and between stakeholders. On the targets side, the NZIA is exploring the possibility of collaborating with the SBTI, which is the Science-Based Targets Initiative, to develop guidance for the adoption of a 1.5 degree aligned insured emissions reduction targets, which don't exist today. The Asset Owner Alliance, which I mentioned, in January of this year, issued their target setting protocol for 2025 emission reductions from the investment side, and against which 29 of the members have already issued their 2025 targets, which are in the range of 25% reductions across the portfolio. Some are higher than that, but it gives a structure, a framework of how to do that. We don't have that sort of protocol on the insurance side, and so this is the development that needs to be done. There is a white paper in development that recognizes that there are various approaches to arriving in net zero, and therefore we need to work to unpack what each of these can look like. One is in the area of setting independent underwriting criteria and guidelines for where members can have the most significant impact, particularly dealing with the most GHG intensive and GHG emitting activities sectors. And that includes how you engage with clients and potential clients, and how do we transition. A lot of the big actors in the real economy, we can say, we need to figure out how to transition them. It's about fostering innovation. It's kind of the new Teslas, we would say, but it's also very much about how to navigate the large actors in the economy today that have the skills, but don't necessarily have all the resources needed to turn the ship. Obviously, there'll be the need for a lot of different new types of insurance and reinsurance products, the solutions, different types of arrangements to help foster the uptake on the low emission and zero emission technology side. I think that's obvious. There's also work to be done in terms of improving claims management in a sort of environmentally sustainable manner to promote the overall net zero economy. There's work to be done of integrating what we call sort of independently determined company-specific net zero decarbonization related risk criteria into the risk management frameworks. And then finally, there's the need to advocate for and engage in governmental policies, which need to be science-based and socially just in terms of the transition of the many economic sectors that will need to move in this direction. Antitrust is a key issue in this space, and the NZIA has, I think, from the very beginning, acknowledged, the importance and the need to ensure that the alliance's actions and initiatives comply with competition law, and particularly here because of the actors involved, EU competition law, and therefore this has been part and parcel of the preparations. And the legal analysis developed so far, come to the conclusion that the proposed implementation of the commitment to establish common metrics and methodologies does not go beyond what is necessary to achieve the objectives of this specific commitment and complies with antitrust law. So basically, we're creating a wide set of metrics and a framework, but it's actually every actor is acting based on their own dynamics and not working closely together in terms of how we arrive at that. Engagement is certainly very important, and it's not only with corporates and clients, it's also certainly with regulators. And through this, we work with the Sustainable Insurance Forum, IIS, and US regulators and others. And finally, life and health, which is in many ways a new area, I think, when we talk about climate, at least from an insurance perspective. And so we are setting up an exploratory work stream that looks at life and health insurers and how they can better understand their role in and shape the contribution to the net zero transition. Now, on the adaptation side, even as we move to net zero emissions economy, certainly there is a lot of resilience and adaptation work, which will be imperative. The insurer's role in absorbing financial shocks from climate-related losses and de-risking the implementation of cost-saving renewable energy and energy efficiency for infrastructure, for instance, that is two sides of the same coin. And I just would like to mention that we are actually in the process of setting up something called the V20 Sustainable Insurance Facility. Now, this is to be hosted by the PSI, but it's led by the Vulnerable 20 group of ministers of finance, which is called the V20. Essentially, it's a type of project pipeline development facility within the Climate Vulnerable Forum, where it will assist V20 economies in scoping the types of financial protection needs of the SMME, the micro, small, and medium-sized enterprises sector in the context of climate change. And as we know, this is the part of the economy that is particularly exposed and particularly not in a great position to respond, to prepare. And so that's a type of facility I think shows in terms of the global agenda. There will be a lot of needs from the largest companies down to the smallest, from the wealthiest economies, and definitely down to those developing and emerging. So with that, I would like to say thank you, looking forward to discussions. And also, we're all looking forward and together contributing to a successful outcome in Glasgow.
Thank you, Eric. Thank you very much for those remarks. My day job is as President and CEO of Insurance Bureau of Canada, and we're proud signatories of the principles for sustainable insurance that UNEP has put out, and also proud to be associated with the work that it's doing, and especially so on the adaptation side. This has been a particular interest of ours here in Canada, where temperatures are rising quicker than most other places in the world, and we're seeing the effects of that. And so in addition to mitigation strategies, we've for many years now been focused on trying to make our communities more resilient, and welcome the work that UNEP is doing in this regard. So again, thank you very much, Eric. It's now my pleasure to introduce our panel for today's event. Ekosui Iyahan is the Secretary General of the Insurance Development Forum. Florence Lusma is the President of the French Insurance Federation. Vicky Saporta chairs the Executive Committee at the International Association of Insurance Supervisors. And Dave Snyder is Vice President of International Policy for the American Property Casualty Insurance Association. So clearly we have a tremendous depth of knowledge and experience with us today to consider the role of the insurance industry in the global push to both combat and, as I mentioned, adapt to our changing climate. So I'll now turn our moderating duties over to Daniel Stander, Special Advisor to the United Nations. Daniel, the microphone is yours.
Don, thank you very much for hosting and inviting me. It's a real thrill to be around the virtual table with Dave, Vicky, Florence and Echo Shui. We've heard a lot already about the value of the insurance industry in helping us build sustainable and resilient communities. I wondered, though, if I could begin, Echo Shui, by directing a question to you. Maybe it was because my colleague in the UN family, Eric, mentioned the V20, and I was with you last night at a very important event as you were in your role as Secretary General of the Insurance Development Forum, making some important announcements around the work that the IDF is doing with the V20. But could you please, for us, situate the need for insurance and the role of insurance in the wider global economy for us?
Thank you very much, Daniel, for that, and also to Jiffy, obviously, for the invitation to be part of this. To your question, I think, well, I'll step back a bit and say I come from the experience of being Nigerian and Barbadian. And in both of those contexts, when you think about Africa and the Caribbean, there are regions where, experienced, when we think about climate change, the impacts are not in the future. The impacts are today, right? It's very, material for these countries who are on the front line of dealing with the impacts from climate change. And so there is a need, and there's been an urgency around adaptation and the need to deepen resilience. And in that context, there's actually been quite some innovation taking place within many developing countries, really trying to grapple with how can they deal with the impacts that they are already having to contend with. And part of that has manifested itself in I would say a couple of innovations. We've seen the emergence of regional risk pools in the Caribbean, in Africa, in the Pacific, where these governments have really been trying to deepen, or I should say, trying to find ways in which they can access financing to help them absorb some of the shocks and impacts that they're experiencing. So one of the things that we've seen as the IDF has been, the insurance industry is very well positioned to support those countries, right? Where you have 1 to 3% in terms of insurance penetration rates. There's tremendous expertise in terms of building and understanding around risk, in terms of underwriting, and also your role as investors in thinking about trying to tackle this problem that we are seeing in many countries. So again, Daniel, as you referenced, yesterday we did launch a partnership, again, with the V20 group of countries, which are now 55 of the most vulnerable countries in the world. And the focus of this was a public-private partnership with that community at their request to develop a partnership that's focused on risk and resilience analytics. And the objective of that is to help them to, yes, we can talk about the data around climate, but to help them translate that into risk information that they can act on, right? That can inform their investments, that can inform their education with the multilateral development banks, that can inform the negotiations around adaptation and what it is that they require. So when I think about the role that insurance can play, it is fundamentally, and I'm talking about in the context of those countries that are on the forefront of dealing with climate, it is helping them to unpack what does that risk look like for you. But it's also about offering new innovative products in terms of the regional risk pools that I had mentioned. But beyond that, it's also beginning to think, and this is an issue that straddles not only developing, but also developed countries. What are the protection systems that we need to start thinking about and designing to help us to deal with the kinds of scenarios that we are faced with when we think about climate change? And from my perspective, there is no better actor than the insurance industry to work with the global community to tackle this problem. It's difficult, it's complex, it's challenging, all those different things. And in our event yesterday, we heard from the public sector really looking to the insurance industry for leadership and support in this direction. So I hope that gives a steer, Daniel, in terms of the thinking that we are seeing evolving around this question of the role that insurers can play.
It does very much, and thank you for foregrounding the needs of the most vulnerable, and because we know that as climate hazards increase, it's the marginalized communities that are going to be most affected. You spoke about data, you spoke about analytics, and you know that I can talk about that all day, but I wanted to contextualize that in a broader framework around the enabling environment. Yes, we need access to information. Yes, we need the ability to structure risk pools. But I think there's an important role for regulation to play, for supervisors to play, in order to increase the capacity in local markets around the world. And I wondered if, Vicky, I could bring you in here to talk about the role of the supervisor globally as an enabler of the insurance industry in order for the insurance industry to fulfill that societal value Echo Shui was so articulately expressing.
Yes, thanks very much, David, and it's great being on this panel today. It's, the role of insurance supervisors from a global perspective is protection of policyholders, maintenance of fair and stable markets, and contribution to financial stability. And the International Association of Insurance Supervisors expects to see in the mandates of the supervisory members these core objectives. And indeed, they're very, very common across our membership. And we cover 95% of basically jurisdictions in the world. The issues around market development are not universal amongst supervisory mandates. Some supervisory mandates include them. They tend to be, we haven't done a recent survey, but from other sources and from past surveys, they tend to be more common amongst emerging and developing economies, and that is not surprising given the degree of insurance penetration in developed economies vis-a-vis developing economies. Now, I think, and I think this view is shared by our members, that the risks from climate change are central to the core objectives of supervisors, with or without market development, even without market development. I mean, first of all, financial stability. I mean, it is such a systemic, it's the definition of a global risk, and in too late, too little scenarios or disorderly scenarios, it has been shown that the repercussions for financial stability will be broad and very serious. Secondly, of course, if particular insurance companies are not resilient to climate risks, either on the asset side of the portfolio or the underwriting side, and it was very interesting to hear Eric's remarks about the initiatives on the underwriting side where less progress has been made, then policyholders are going to be threatened. And clearly, no fair and stable markets will be made. So, I would say that climate and risks from climate change are absolutely central to the supervisory mandates, and indeed, this is the reason that our membership, and I could talk about that later, is doing a lot of work in this area. Finally, when of course there could be regulations that could impede climate adaptation and climate risk mitigation, then of course supervisors and regulators need to look at them. But I have to say that this is not something where we have seen many examples. By contrast, the issues are how can we support our member supervisors to ensure that insurers are actually managing the risks on both sides of the balance sheet and in aggregate appropriately. Thanks, David.
Thanks, Vicky. Very interesting points, especially around not just the capabilities, if you will, in terms of capacity building in market for the insurers themselves, but also for those that are supervising, and that's the role that you play. You said something else that's very important, I think, which is this contrast between it's a global financial system, but every market is different. And therefore what's required in every market is different. And I wondered, Dave, if I could bring you in, because your perspective is, if I may say, very US focused, and I'd love to hear your reflections, perhaps compare and contrast what you've heard so far from Echo Shui and Vicky, and indeed Eric and the others that spoke about the global issues and how that's playing out on the ground in the US. Interested in your views, please.
For sure. Well, thank you very much. It's such an honor to participate with this distinguished panel and to play a role in connection with COP26. I had the opportunity to briefly attend COP21, and the energy and the dedication that you take away from these sessions is something that I think you carry with you forever. And so my one regret is that I've not been able to be in Glasgow in person, but I'm feeling the energy and the dedication even long distance and remotely. I believe that in many ways the US has begun a transition, and the insurance industry is playing a key role in that. We are the largest insurance market in the world, but it's a very diverse market. Life insurers, health insurers, P&C insurers. Just within the P&C sector, there are probably 2,000 insurance companies. And the business models are extremely broad, ranging from international companies, some of whom have been mentioned already in this program, and we're proud that they're part of our market. Our market also includes middle size and some companies that write one line of insurance in one of our states. So one of the challenges is not just the what, moving toward a decarbonized economy, but how, especially in the context of markets that are so very diverse. The second point I want to make specifically about the US market is our liability exposure. One of the things that the US is known for is a hyperactive liability system, so that the same disclosure in one country could have adverse negative consequences on insurers or our policyholders. So there's a degree of caution that we need to insert into the process. And finally, was already mentioned, very strong commitment to antitrust rules, which again is sort of a yellow flag, if you will, about what we can do collectively. But I want to speak about the larger context for a minute. I do believe that the United States, and transitions by definition are sometimes messy and sometimes there are reversals, but you see an overall progress and movement in the right direction. And I do see that. I see, for example, our government at the federal level is clearly laying out a framework for moving the United States forward. I see growing concerns at our state and local levels with virtually every issue relating to making this transition, from land use to other important functions performed at subnational levels. I see the insurance regulators in the US, and I would note that our states, I believe, were the first insurance regulators to require mandatory public climate-related disclosures. And they're looking at those disclosures now to seeing how to better align them with the TCFD. And at this point, 80% of our industry is responding to the existing survey. And finally, the general economy. We see efforts in the part of the energy industry, for example, in mergers and acquisitions to look for how can they link up with renewable areas of the economy. And the insurance industry has been and will continue to play a key role in mitigation, in looking more and more at our investments, looking at our underwriting on an individual level, and working with governments to deal with that most fundamental of all issues right now, because climate change is already happening. How do we mitigate and best protect our public as well as we decarbonize for the future? So for all these reasons, I'm frankly very optimistic. But again, it's a complex political environment in the US. It's a complex business environment for insurers, a great diversity of views. But I see a movement and a concern from the individual member of the public, right up to corporate America, to our regulators, certainly to the insurance industry, overall a movement in a direction of seeing how we can best get to a decarbonized environment.
Thank
You're on mute, Daniel.
I beg your pardon. I was going to say, Dave, thanks very much. I found that message very hopeful. You spoke of optimism. I too am hopeful, but also you were very clear on foregrounding the scale of the challenge, and that the challenge is larger for any individual actor or any individual sector to address alone. And I wondered, Florence, if I could bring you in here, because the scale of the challenge is so great that neither the public sector nor the private sector can address it alone. And it's going to require deep collaboration. And I wondered if you could speak a little bit about how you see the insurance industry from your perspectives in France, but also more broadly, collaborating at a nation state level with governments, but also with municipalities, with the private sector that have the real assets where the risk resides, so that we can find a multi-party solution to what is a very, very challenging situation.
Thanks a lot for inviting me here today. It is a pleasure to see so many committed actors gathered to discuss such central issues. And indeed, adaptation and resilience are a watchword for our industry. And as Ecotue has said, our industry, we are perfectly aware of our pivotal role in both managing natural risks and also financing the real economy. Let me just maybe remind you of all the commitments that we have recently taken at the level of my French Federation of Insurance, so which covers all insurance companies on the market, even if some of them are even well ahead of all these commitments. So already in 2017, we took the commitment to stop coal expansion. This year, we joined the Net Zero Owner Asset Alliance to give all the support to all our members. Last week, we announced that we were taking a step further towards unconventional fossil fuels, because they are clearly the top priority to mitigate the greenhouse gas emissions. And last but not least, today, we have just announced a series of commitments regarding adaptation, because we must be aware of the fact that we have specific tools to have an impact on the direct and the real economy. For example, for car insurance, we commit to promote the use of spare parts from the circular economy. For home insurance, we will favor green repairing instead of replacement of goods. And in the building sector, we are also active to support reuse. Regarding the public-private systems, I think we took this initiative a long time ago. In fact, we took it in 1982, and ever since, all French citizens which have a property casualty coverage are covered against national catastrophes. And this at a rate which is very moderate, because for individuals, the average premium to cover these national catastrophes amounts at 25 euros per year. How is that possible? It is possible because it is a mandatory warranty extension for all property casualty insurance contracts. So there is a mutualization of the risks for all the French geography. And once national authorities officially declare the status of national disaster, then the regime and thus the coverage is triggered. And why is it a public-private partnership? Because we, insurers, we benefit from an unlimited reinsurance guarantee scheme through the national reinsurers. Today, it's fair to say that our regime is challenged because of the growing cost of natural hazards. We issued a survey last week, which showed that in the next 30 years, the cost of natural catastrophes, if we make an assumption of a +4 degrees Celsius, then will be twice as much as what we have experienced in the last 30 years. But there is a lot of information that we can draw from this prospective study. First, half of this increase is explained by a wealth factor which encompasses both the average increasing value of properties and also the increased density around exposed areas, which means that we can act against that increase, which is due to the wealth factor. Second, a third of the increase is due to climate change. And once again, there we can and we must act on prevention and adaptation. And of course, we also see in our country the arising of new climate perils such as drought, whose impact may triple by 2050. So I think that the alliance between a public-private scheme together with prevention and adaptation are key to deal with this sustainability issue.
Thanks, Florence. You if I may paraphrase, very nicely laid out the fact that hazard is increasing, that exposure is increasing and increasingly concentrated, and that vulnerability is increasing, and as a result, risk is increasing. And given the size of the task, then public-private collaborations are going to be essential. Eka Shui, I'm reminded of the tripartite agreement, perhaps as a model for this kind of public-private partnership. I wondered if you could unpack that for others who may not be so familiar with it for us, please.
Yes, thanks, Daniel, for that. So the tripartite, which Daniel referenced, is really a collaboration between the IDF, which is a public-private partnership in and of itself, led by the insurance industry, co-chaired by the World Bank and the UN system. But the tripartite is a collaboration between the IDF, the United Nations Development Program, and the German government. And what informed it was the fact that I think for many of our members, the insurance company members that we have within the IDF, really, I think great efforts over the years to engage with developing countries around the kinds of challenges that I had identified earlier in terms of how can insurance help them to manage the kinds of impacts and shocks that they're seeing from these disasters. But this is complex work. It's not just simply about offering an insurance project. Again, to the point I was making earlier, it is about how do you make those risks transparent? How do you work through with the government how it currently deals with that risk? Who owns the risk that is on the table? Who pays for it? And if you're thinking about an insurance, how is that financed in governments that are severely constrained? And so those are the complexities I think many of our members are faced with when they start to engage with the countries that we are dealing with, or we're interested in primarily within the IDF. And so what we decided and what we kind of landed on was, here was a perfect opportunity for the insurance industry through the IDF to collaborate with the United Nations Development Program, which is an institution that has over 150 offices right across the globe, is directly having conversations with governments around their national adaptation plans, is having conversations around what are the development aspirations of these countries. And one of the, I think, glaring, issues that we saw in that conversation was the need to actually strengthen this conversation around risk and the role that insurance can play in that process of strengthening resilience. And so this partnership was born out of how can we work with the UNDP, the direct presence that they have in all of these countries, to really bring to the fore the relevance of insurance, not only through discussions and really trying to mainstream that in the public financial management process, but also taking it a step further to think through what are the kinds of solutions that are actually required. So through this partnership between the IDF and UNDP and the German government, the German government obviously is providing financing to support the engagement with these countries to do the necessary technical work that is often required to make this material for these governments. The UNDP, obviously, as I mentioned, has a direct presence in country, already engaging with governments around issues of development. And so again, expanding that conversation with governments that we are having around insurance, risk reduction, risk management. And then the industry bringing to bear its technical capacity in terms of risk modeling, but beyond that, also making a commitment of $5 billion in offered risk capacity. And so for us, this is not just simply about a conversation with government. It's about taking that right through to implementation. And so what does that mean on the implementation side? We launched this program in 2019 at the UN Secretary General's Climate Action Summit. Currently, we have active discussions already ongoing with 15 governments. In addition to that, in the period of these few years, we've launched a program in Peru where the government there is interested in providing insurance coverage for 50,000 public schools. And part of that process is actually developing a database for that government that takes stock of what do those public schools actually look like in terms of your infrastructure, right? And that is not only important for underwriting purposes, but it's important in terms of how the government thinks about managing that stock of infrastructure. And so that's exciting because right now the conversation with the Peruvian government is not simply looking at how do we insure public schools. They're thinking about how do we insure hospitals? How do we insure other kinds of infrastructure? And this is quite remarkable when you think about, going from a place where, they were a desperate situation in managing floods from the 27 El Nino experience to now really being able to think through new kinds of solutions. Similarly, we've seen a project in Medellin in Colombia where the focus is again on flood risk, and that requires innovation to think through, working with industry, with our partners in NASA, with UNDP, who has a presence on the ground. What could this look like, right? It's complex already to just think about flood risk and designing an insurance coverage around that, especially in some of the countries that we are dealing with. But we are making headway in a number of countries. And so the idea of the tripartite is really to accelerate those conversations. It is to mainstream the conversations that we have with governments around the role and relevance of insurance. But importantly, it is also about solutions, because for the IDF, and the central reason why it was also established was we can talk about the protection gap from here till forever, right? And the reality is that protection gap is not closing, right? So we also need to have a very applied approach and strategic approach and focused approach in terms of how are we actually going to start working towards closing that. And some of that is, yes, developing these projects that we are seeing in Peru, Mexico, Medellin, in Ghana, etc. But it's also the opportunity for learning for those companies, for the public sector institutions to kind of take this to a second phase. So I hope that gives Daniel a sense of the tripartite program.
For me, very much so, and it's very compelling. Echo Shui, thanks for sharing. And I'm struck by a number of things, not just the fact that the insurance industry is providing capital, it's providing technical expertise, but it's providing solutions and implementations on the ground in partnership in 170 countries with UNDP. And whether it's you mentioning Medellin or Lagos State or Ghana, we know that it's real and it's long term. I'm wondering in this context, Vicky, this is a difficult era. It's an era of a protection gap that's not closing, but it's also an era of climate risk increasing. What are the priorities for supervisors in this context? What are your top 2 or 3 priorities currently?
Yes, thanks for that. And it's an excellent question. I mean, our priorities, and it's related to the comment you made earlier, is to support supervisors to understand and to have the tools to actually supervise the risks that insurers, the companies that they supervise, face from climate. This is a huge priority, and that is why we have already issued a paper that's guidance. It's called an application paper in our jargon, that earlier in this year that sets out how to go about doing this, including on how to go about disclosing. Which goes back to what Dave was saying, the developments in the US. Disclosure is disclosing material risks is an insurance core principle. It's an insurance core principle 20. The core principles are the list of principles that every supervisor or every firm, some of them are addressed to supervisors, some of them are addressed to firms, should follow. And one is about disclosure of material risks. Our paper makes it pretty clear that that we think climate risk is a material risk. And therefore, firms should disclose against it. And TCFD is the best we had at that stage. So that is included as part of the application paper. On disclosure as well, the IIS earlier this year welcomed the IFRS Foundation's efforts then towards the establishment of an International Sustainability Standards Board. We now have the announcement that was made last year. We think this is the best way to go forward to having global reporting standards that won't only apply to insurance firms, but it will apply also to the customers of insurance firms and also to the entities that insurance firms invest with. So it's very important for global standards to be developed, and we'll be following this closely in order to decide whether to reflect it in our own disclosure standards under Insurance Core Principle 20. Now, beyond this, beyond helping our insurance supervisors manage the risks themselves and supervise them, and we obviously offer capacity building help, technical advice, together with a number of partners, which includes the Access to Insurance Initiative, UNCIF, you mentioned it earlier, Eric mentioned it earlier, and others. We also think it is very important to look at best practice amongst our supervisors and to try to disseminate it. So one piece of work that's happening now is how to do scenario analysis. You might have heard that a number of supervisors, for example, the SSM in the European Union, the ACPR, the Bank of England, indeed, which is my home authority, is undertaking climate-related stress tests. These are essentially scenarios that companies have to run, which give you very important information and data to then help you supervise and regulate, but also understand what's happening in the firm's portfolios and in the firm's asset classes. So this is happening at the moment. A number of authorities are doing it, and there is very much interest amongst the supervisory community to try to understand best practice. And the third area is looking at standards, at gaps. I talked about the Insurance Core Principles. We also have another framework which we use to regulate globally internationally active insurance groups, called ComFrame, which is more detailed and more specific for the global firms. So we're looking at whether we should actually augment this framework, if there are gaps in this framework, and have more standards, global standards for the regulation of companies. So these are the three areas that we are currently focusing on. Thanks.
Thanks, Vicky. It was really helpful. It made me think, as Echo Shui talked about the protection gap, and you spoke about disclosure, it made me think about the situation in the US and having worked with the California Earthquake Authority for many years and seeing the great work that they've done, both in increasing insurance penetration, but also increasing awareness of risk and how we adapt with building codes. But then thinking more for climate hazards around the NFIP, Dave, and the work that they've been doing there in order to make use of, if you like, the balance sheets of the insurance industry rather than of the Treasury, which is ultimately the taxpayer. I wondered if you could speak to what you're seeing as the key priorities in the US, where where the protection gap is, while not as large as it is in developing countries, still material?
Well, you're absolutely right, Daniel. Protection gaps exist in the U.S. and they certainly exist in other countries. And the work that ECOSHA is doing internationally for the less developed countries is absolutely critically important. And there are some elements that are similar between the protection gaps in the less developed world and in the developed world. Number one, I think, and this often gets lost in the discussion, you need an environment where insurance companies can and want to commit their capital to providing insurance coverage. So what do I mean by that? Well, the first thing that's absolutely critical for the insurance industry is the ability to engage in risk-based pricing. And that has multiple benefits, not only for insurance companies in terms of their own solvency, but also for society at large. Those sort of financial signals can be terribly important. And insurance companies need to know that they can manage their assets and their capital consistent with risk-based pricing. The second element is the regulatory system. It's no secret that the insurance industry is comprehensively regulated, and that regulation is terribly important for us and for consumers. But regulation needs to be, first of all, recognizing our diverse insurance markets. It needs to be proportional, needs to be tailored. It needs to be regulation that companies of all sizes can actually do. The second issue is materiality of regulation. That is, companies have very different business models. For example, for the P&C industry, our general time horizon is 1 to 3 years because we have 1-year policies. There are other insurance lines and products with much larger time horizons. And so you need a materiality element about regulation. And the third area of interest in terms of a regulatory system that encourages the maximum commitment of capital to deal with protection gaps is, of course, the issue of confidentiality. It's my view that regulators have a right to see whatever they want to see when they want to see it. But information that is understood by regulators can be badly misunderstood by the public, creating solvency issues for individual companies or even harming the very market that we're trying to encourage to expand. So yes, there are protection gaps. Yes, the insurance industry is looking at how to move forward on these. Regulators have a critical role to play in helping to create an environment where insurance companies can thrive and, yes, make a profit, but at the same time, provide more coverage and then work with the public to reduce their risks through mitigation and adaptation.
Thanks, Dave. I'm reminded of something that Vicky said about disclosure and about the role of the supervisors. I was fortunate enough to sit down with Commissioner Lara, who's the California Insurance Commissioner, and was pleased to hear the NAIC's desire to increase the number of questions that they're asking insurers, and that's very aligned with TCFDs. I'm thinking also about transparency here, transparency around the true cost of risk. You mentioned that with risk-based pricing. It can feel like a bitter pill, but it is the right medicine because we cannot continue to misprice risk in the markets. But I was thinking, Florence, you've done a lot of work thinking about transparency and making sure that there is a transparent dialogue between the insurance industry and the policyholders. Perhaps you could expand on that a little bit for us.
Yeah, and I couldn't agree more with what Dave has just said. We are an industry of trust. So at the same time, it is important to be transparent towards the public. And of course, we are fully transparent towards the supervisory authorities. I'm going to say a few words regarding transparency building trust with the public. And in fact, we as I said previously, we have taken a series of commitments over the past, but I think it's important to display data that shows what these commitments, what do they produce regarding our investment, for example. Since 2017, the French insurance sector releases annually a study which is aimed at measuring the integration of ESG criteria in our investment strategies. And in 2020, we were very pleased because the financial sector, the global financial industry in my country decided a similar initiative with the same goals, gathering the whole French financial sector. And the observatory at the financial sector level is an ideal tool to enhance transparency, of course, but also to monitor progress of our sector. And it is a way to illustrate the great commitment of our sector towards sustainability. Now we can track the results of these active commitments. And for example, for my sector, for insurance, our green assets grew by more than 30% last year, and now they account for more than 5% of all the assets under management. When we said that we were taking commitments regarding the exit from the coal industry, then we divested more than 3 billion euros from the coal sector since 2017. 75% of our assets are currently covered by a climate or an ESG, to speak more broadly, analysis. And last but not least, the observatory is a really great place to exchange with other sectors of the financial system. We compare methodologies, we see how there is room for common solutions to similar issues, because we are only at the beginning of a process. We must also incorporate all the coming results of research and of technology, of innovation. And this is true for insurance. This is true also for the whole financial sector. So definitely the French observatory has created a very dynamic, positive dynamic for mutual understanding and mutual learning, which in the end drives forward the transformation of the financial sector.
Thanks, Florence. I'm reminded of the old adage, what gets measured gets done. As you were talking about the transparency, the availability of data to set clear targets and then to deliver on them, but also from a risk standpoint, better understanding what our risks are and how we can reduce them. Eko Shui, I know that that those two dimensions, if you will, of risk and of data are writ large in your work. I'm thinking about things like the Ensure Resilience Global Partnerships Vision 2025 and the targets that we set ourselves and managing and measuring ourselves into delivering against those targets. But I'm also thinking about the democratization of data, if you will, to those that need it in order to be able to better understand their risk, because that is then the basis of, whether it's from an adaptation standpoint or a risk pooling, risk transfer standpoint, doing something about it. So I wondered if you could speak a little bit about trust and how data is enabling the trust that underpins the insurance industry.
Great question, Daniel. I think, I had a conversation last week. It was funny. It was with Professor Abhijit Banerjee, who was the 2019 Nobel Prize winner for economics, and this question of trust came up in that conversation. And they've done quite a lot of work with vulnerable communities around insurance and why, it's, some of the challenges that we have there. And trust was a very big part of that. And he mentioned the part that the fact that, okay, yes, you can see developments with parametric insurance products, for example, which people say, okay, they're quite straightforward, etc. But the small farmer in a little village, he doesn't quite understand, how this thing works. And you say, okay, there's data in a weather station 2 kilometers down the road. Who's reading that data? Who's responsible, right? So these are elements that speak to the question that you've raised, which is around trust. And we know that as a community, insurers as a community, there's a lot that needs to be done in terms of cultivating trust. And it's also speaking to the points that Vicky raised around regulation, right? But within the IDF, to the point around data, And as I mentioned earlier, the partnership that we launched with the V20 is very much centered around building an understanding. When we talk about insurance, what are we talking about? What informs that? What informs the structuring of a product, right? And part of that is that fundamental question around what is this risk that we are dealing with, and who owns it and who pays, and what is the role of insurers within that picture, and what is the role of public finance in that picture, and what is the role that other actors might play within that picture. So for us, the partnership that we launched with the V20 is actually, I would go as far as to say it is about cultivating that trust and confidence in what it is that the insurance industry can bring to the table. So the design of that program was not simply, okay, let us, sit in London or wherever else and develop maps for these countries, right? But it's to actually say with those countries, let's first and foremost have a survey of what do you see as your priorities when you think about the risk gaps that exist within your country. How can we work with you, building on what the insurance industry has already invested in terms of the trend that we are seeing towards open risk modeling frameworks and improved standards? How can we work with you to begin to plug some of that risk information gap that exists within your country? And then using that information, how can we begin to design meaningful solutions that actually address the kinds of problems that you're faced with? And that process, it might seem tedious, it might seem, complex, all of that, but it's actually quite important when we think about sustainable market development. It's important when we think about the value proposition of insurance in these markets where it doesn't play, frankly, as big a role as it should and it ought to. And so for us, the role that we can play as a partnership between the public sector and the private sector is to deepen that understanding that the insurance industry can play, but fundamentally built on how can we support you to understand what those risks are. And from there, how can we begin to design solutions? And I fundamentally believe that supporting that level of transparency is what will allow us to drive innovation, right? Because the kinds of solutions that are required are not going to be business as usual, right? And you don't quite get there if there isn't trust and some level of mutual understanding of the problem that we are trying to deal with. So for me, the question around trust and transparency is actually really at the heart of what we are all trying to do here, and how the insurance industry, can help help these governments to really address these issues.
Echo Shui, I'm reminded of the title of the session, right, which is about the insurance industry as a key partner. And I think that's really what you're talking about, because partnership is based on relationship, is based on trust, is based on understanding. And that's exactly what you've described. If I was to nitpick with the title of the panel, it talks about sustainable worlds, yes, resilient worlds, but I also want a just and equitable world as well. And I know you've been very articulate on that point. As we close out here, I wonder, as we think about the role of the threefold role of the insurance industry, as Eric articulately said, as a risk manager to the world, as an investor, and as an underwriter. If I could ask you each for some very, very succinct closing remarks, and I'm going to ask you a pointed question. I'm going to ask you the dreaded magic wand question. If you had a wish, Florence, and then Vicky, and then Dave, and then Echo Shui, one wish, you could wave this wand and you could deliver something from the insurance industry to the world in order to ensure it is resilient and equitable, what would that wish be?
Yeah, good question. Only one. So maybe if I have to pick up and choose, I would say that I would like to grow awareness around the idea of transition. There are some magic ideas here in Glasgow and elsewhere also, which is, okay, let's ask insurance companies to stop investing, to stop insuring whole economic sectors. But this is not the answer. The answer, because then we will kill whole parts of the industry, there will be huge social consequences, of course. So this is not at all the adequate answer. So let's work together on a social transition that, of course, needs the sustainability outcome at the end of the period. But let's move together and work together to find this pathway.
Thank you, Florence. We wave the wand for a just transition. Vicky.
Yeah, I mean, if I had a magic wand, I would want COP26 to be a success. And what I mean for that is that governments around the world put together climate pathways that lead us very clear, achievable, just, equitable, socially acceptable climate pathways that lead us from today to 1.5 degrees, which of course will require support for those countries that start at a much lower GDP per capita point. Once we have that, then myself as a regulator can make our lives become much, much simpler, because that we can regulate the industries against these climate pathways. Which company is actually meeting it and behaving in this particular way, and which company is not. And the companies that are not, then obviously there will be regulatory consequences, because at some point they are going to try to face losses and not protect the policyholders. So that would be my magic wand wish.
Thank you, Vicky. Well, Florence Ecochouet and I are here in Glasgow. We have limited powers, but we will do our best. Dave, you were hopeful, but you were clear on the size of the challenge. If you could click the fingers, wave the wand, what would it be?
I think it would be insurers want to be and can be significant partners with government, with the public, with activist groups, with whomever. But please understand the business realities under which we exist, so that in fact we can play the role that everyone wants us to play and we want to play. JIFIA has released a statement in connection with COP26 that I think well lays out those realities and the potential role that we can play. We want to be partners, just as we need to understand the needs of government and understand the needs of public and to understand the needs of the real economy. Please understand our realities. And if those are taken into account, I'm absolutely convinced we're going to be the partner that everyone wants us to be.
Thanks, Dave. I share that optimism, by the way. The insurance industry is a key enabler, Ecochouet, of resilient communities and just economies. Your wish?
This is really difficult. I'm going after Dave, Vicky, and Florence. I would say my wish would be greater risk literacy. And the reason I say so, and this extends beyond climate, I mean, looking at the experiences of COVID as well, right? And just how people rationalized that. And the fact that the industry was talking, if we think about COVID pandemics for a long time, but it didn't quite get through, right? So I think that experience, as well as climate change, presents us with an opportunity to engage with the public around risk, right? And that question of risk literacy. And I hope that can help to address some of the issues that, my fellow excellent panelists have raised, from Dave around the limits of insurance and what is that sweet spot for insurers, right? To Vicky around the regulatory challenge, which is also about protecting the consumer. And so you understand that picture. And also Florence, right? And the comments that she made. So for me, the wish would be, how can we do more to engage the public and deepen the understanding around risk? And I actually think that we have an opportunity right now to actually step up and support that conversation in a much in a bigger way than we did before the pandemic, and certainly before COP26. So It's simple, but that's it for me.
Well, I know I only gave you one wish each, but we have 4 wishes. We have a wish around transition. We have a wish around a sustainable pathway. We have a wish around being the business partner that we can be, and we have a wish around risk literacy. Don, I wonder if you could come in and perhaps summarize. But for me, I just want to thank Echo Shui, Florence, Vicky, Dave. It's been a real pleasure discussing this with you, and I look forward to carrying on the conversations.
Thank you, Daniel. And one of the weaknesses of this new virtual world is you can't hear the applause. So you'll have to take my applause for that panel. What an excellent conversation that covered so much ground. Daniel, you were masterful. You're also brave at the end, limiting our colleagues to just one wish. But as you said, in the end, we had 4. And one of the things that I took away there was so much in that panel. I have pages of notes here that I will be going through in the days to come. But one of the themes that came through for me was the need for and actually the increased incidences of partnerships and collaboration between the insurance industry that happen these days, and there is a sense of urgency that I believe is a thread that runs through all of this, and hopefully, to Vicky's point, runs through Glasgow as well. And finally, just to pick up on some comments that Dave shared with us, which spoke to the complexity of our sector. And the work that Jafia has been doing in trying to bring the global insurance community together and doing this under the leadership of the French Federation. Florence, your team has done a masterful job of doing that and trying to create those sets of conditions that Dave so capably described at the end in terms of a level of understanding that allows us to step up and do as a global insurance industry, the work that we know we're capable of doing and the work that we want to do. So thank you once again to our speakers. A wonderful job. Now, most of us, have a range of reasons for caring about the impacts of our changing climate. And some of those reasons are collective in nature, and some of them are personal. And for me, I think often of my grandson. Now, I grew up on an island in Canada's Atlantic region, and I wonder how that beautiful place is going to be transformed. And what's going to be different for him, and what are the hardships that are going to emerge? And then, of course, the most important question, which is, what can I do now? What can we do now to limit the impacts and reduce the dangers and turn the tide? I'd like to leave you today with this thought, something that came through in the panel, I believe, that mobilizing private sector capital is critical, absolutely critical to driving and financing the transition to a low carbon economy. The key is not only to support existing options for sustainable finance, it's to encourage participation and growth in the sector. And we will all benefit from having a larger number of sustainably minded companies in operation. Now, based on today's discussion, we should be heartened and energized by the fact that so many of us share the same goal, the same destination. And the challenge now is to get there together. And on behalf of the Global Federation of Insurance Associations, thank you all so much for joining us for today's event. Take care. Please stay safe. Bye-bye.